Good morning to all traders and welcome on this Wednesday, the 7th of October to our market insights. So President Trump last night ended talks with Democratic leaders on a new stimulus package, hours after the Federal Reserve Chair Jerome Powell's strongest call yet for greater spending to avoid damaging the economic recovery. He said last night that he's instructed his representatives to stop negotiating until after the election, when immediately after he wins, we'll pass a major stimulus bill that focuses on hard-working Americans and businesses. This has led gold to drop overnight by $40, and major US indices have also felt the effects of his tweet. Yesterday, WTI crude oil futures rose to an intraday high of over $40, as 29% of oil output was shut in the Gulf of Mexico ahead of Hurricane Delta, which has now become a Category 4 storm. Across the other side of the pond, the UK witnessed a record number of daily COVID infections, which stood at over 12,000, as the UK looks to go into another lockdown just as Brexit talks show that a trade deal is becoming more realistic. And later today, we have the FOMC meeting, which with stimulus expected to be at the top of the agenda. So with that being said, the more obvious instrument to first look at today is gold and the performance. So what we've seen over the course of the last year is this risk-off sentiment, which has led prices to record highs. But I just want to focus on the downside now, because we're seeing that bias is going on the downside. So I just want to zoom in a little bit to get a bit more better perspective. So I want to focus just mainly on the downside. So I'm just going to put a Fibonacci in from the high to the recent low. And what I can see here is that prices are trading very far away from the Ichimoku cloud, and as I said, the bias is on the downside, and there's no reason why we can't see prices hitting this recent low. So we saw the $40 depreciation yesterday. From here to here, there's only roughly about $30, which isn't really nothing at all in this volatile climate. If for whatever reason it can claw its way back up into yesterday's highs, then we could see another push roughly around the $1,910. But we'll have to wait and see. I'll be looking for that in the next couple of hours, not even throughout the trading session, because gold is actually obviously quite volatile at the moment. So I just want to take you into a 4-hour chart now, just to get a better perspective. So as we can see here from the previous daily chart, the prices are just hitting some resistance on the cloud at the moment. So if it does not breach the cloud, then like we said on the daily chart, we could see prices falling further. If it can actually get inside and engulf, then we can see prices trading at the top end of here, which is about the 1,900 psychological zone, which is quite good for a buy stop position there. And then I'll be looking at the next level, which is about 1,910 and then 1,920. So it seems to be going in $10 ranges at the moment, and then we can see further attempts to get roughly about to these highs witnessed in the last few days. So this is what I'll be looking at today. So just a quick look on US oil as well. I just want to bring it onto the intraday level. So from what we saw yesterday, we had a very bullish sentiment from the beginning of the week, and we've seen a bit of a stumbling block due to the API data and the recent hurricane, and maybe more hurricanes hitting the Gulf of Mexico. So that gave us a bit of a negative sentiment there. And we've got EIA data later today as well. So what I'm going to do is just put a small Fibo on the highest to the lowest. So the lowest to the highest for the recent times. And what I'm looking at now is, now that prices are engulfed in the cloud, I'm looking roughly about this level here, which is the $39 range. We've seen yesterday that it did hit $40 again, but it couldn't hang on to it. So we've got a little bit more room. I'll just zoom in a little bit more for you. We've got a little bit more room to go to the $40 range. If it does not find any resistance, we could see prices going up to the $41 range, which we've seen in mid-September. So I'll be looking today to see if we can hit this range here, $39, and then we've got room for more downside, and then obviously to these lower levels here. So I'll be looking at sell positions if it can get to these levels here. So that's all for me today. Thank you very much for joining me. If you have any comments, please feel free to leave them on the post, and I'll get back to you as soon as possible. Have a great trading day ahead. Bye for now.